Welcome to the podcast with your host, Jake Emerald, and Dr. Stock, also known as me, Ben.
What's going on, guys? This is Jake here from WeTradeHQ. We are now on episode 3 of To The Point podcast, which is crazy. I am joined by Ben over to my right. And yeah, we are excited to talk about some news, give our thoughts, and just, see what's going on in the market. And, talk about our opinions. So
yeah, let's get into it, guys.
Let's do it. All right, so first news item. Tesla stock is down 8% after they posted lower than, I guess, the analysts' expectations of their Model 3. So about 63,000 vehicles were delivered in the first 3 months of 2019. That is a 31% drop from last quarter.
Yeah.
And that's insane. And they laid off a lot of employees in January, I believe. So I think it's that transition phase where they laid off a lot of employees, but now they're trying to catch up to what they were doing before. So, I mean, overall, it's kind of a short term. Like, this is just a quarter, and I think they're still going to hit their annual kind of sales target.
There's also a separate piece of news going on around Tesla right now with the securities regulators with CEO Elon Musk, because he's just always making tweets and stuff. So there's a federal judge that's scheduled to hear his oral arguments in that case, which is just a separate piece of news and could be kind of contributing to the 8% drop. But, I mean, that's not unlike Elon.
He's always on Twitter, spouting knowledge and facts,
Yeah, and I mean, he's been fined before. I think he probably got... Did he get fined again? I think I read something about it earlier, but...
Probably.
Yeah. They're down 8%, but I wouldn't be too worried. I feel like he's got...
They're fine.
Yeah.
They're absolutely fine. I just, like I said, they're just in that transition phase from, laying off some employees. They're probably working on automating their building process more, and that's going to take time to transition. So I don't think it's a big thing, but people, anything with Tesla news is like, oh, everyone's up in arms, like, oh, they're going to crash and burn. But
yeah,
I don't know why there's so many haters. Like,
they released a statement on Wednesday saying that they're ending the quarter with sufficient cash in hand.
That's awesome.
But because of what the analysts had said, they had a drop by 8%.
Mm-hmm.
So,
anyways, so yeah, that's our first news item.
Yeah. So the next news item we have here is just some interesting information that we stumbled across here about IPOs and Lyft. So we covered Lyft last week when I was gone,
and the week before.
Yeah,
every week so far.
They've been in every episode, sponsored by Lyft here.
I wish.
So they had the IPO, and as of the recording last week, we were pretty positive about it.
Yeah.
But looking at it, I mean, it kind of went downhill pretty quickly.
Yeah, I'll pull it up here.
We can pull up a stock chart. But the news item that we found, the chart here is titled Pre-IPO Net Income Compared to 2018 Net Income. So it just shows a list of different companies that have IPO'd over the years and the revenue or the income that they've made, the net income they've made this past year in 2018.
Mm-hmm.
So we can see on the left is Amazon, and I don't think it's really a fair comparison because Lyft is just IPOing now, and we're comparing to Amazon, which IPO'd over 20 years ago.
Yep.
So obviously Amazon's had a lot more time to get onto their feet, but even if we do look at some of the numbers here, like Amazon, the year that they IPO'd, they were only $6 million in net loss. Even with inflation and everything, that's nothing compared to like what Lyft is in the hole. Like you look over to the right of the chart there, and you see the blue on the bottom.
900 million.
Or sorry, the red. Yeah, like that's what they're in debt prior to their IPO, and then you can also see that they're in debt with their income. So like Tesla, same thing.
Yeah.
Snapchat, Lyft. The only company that's really done it recently was Twitter, where they prior to their IPO, they were down 79 million, and now they're up 1.2.
But Twitter took a while to become profitable. Like I think it was 2016 or 17 where they finally turned that. I guess
and I think that's what I'm kind of saying. It's not really fair to compare like Lyft to a company like Amazon that's been in it for 20 years.
Yeah.
But yeah, just kind of an interesting chart that we came across here, and they're just talking about the trends more recently, talking about companies like Uber and Pinterest. Uber's lost 1.8 billion in 2018.
Insane.
And Pinterest has lost 63 million for the year. So both of those companies are preparing to file for their IPOs. I think Uber is scheduled for as early as next month, but it's just kind of like this trend that is happening more lately. Over 80% of companies that went public in 2018 were unprofitable. So
that's insane. And I wanted to expand on that more because you have all these companies that, yeah, they get praised for raising, 5 million, 10 million, $1 billion, but they're not profitable. And, think about all the companies that started from nothing, no investments, and they've been profitable. So it just, I know you need capital to get a really good head start, and especially in the tech space, but it's just, I don't know, it's hard to see all these companies in that amount of debt because you see them doing so well. Like, you open Snapchat and you're like, wow, this app is great. And yet they're, down $1.26 billion.
Yeah. And I think what they're trying to compare to is saying, like, okay, here's 6 different companies who were losing money at the times of their IPO and how they've turned out over time. So I think what they're trying to do is put a positive spin on it and saying, like, okay, Amazon was losing money at the time of their IPO, but now look at them. They've returned over 1,000% return on investment from back in 1997. So I think that the article is trying to say, like, give Lyft a chance. Like, they lost money, but, like, give it 20 years, who knows where we'll see them, right?
Maybe they'll turn it around.
Yeah.
I definitely think that whole model is great. In terms of sustainability, we shall see.
Yeah.
But
it'll be a while.
Yeah. So anyways, that's our second news item. Third news item, is that Whole Foods will probably be selling marijuana products. The CEO was interviewed by who was it here? The Texas Tribune. And they actually started talking about alternative proteins like insects, and they are going to start selling insects as well.
Oh my goodness! But
he brought up marijuana, so that's very interesting. We are from Canada. I think we have a couple Whole Foods. We got one in Toronto, one in Ottawa, and it's a great store. Like, I've been there. It's pretty awesome. They have really high quality foods there. I think it's a no-brainer to sell marijuana products.
So it's saying here, who was it that said this? Mackey. Or if cannabis is ever passed in Texas, he's saying the chances are really good that the grocery stores will be selling that too.
Mm-hmm.
And it's just like almost kind of trendy lately for countries and states to be passing cannabis as legal.
Yeah, they're taking so long. Like, I don't understand. It's a no-brainer. It's a great market, and I love the competition and being able to sell marijuana products. I'm not an avid user of it, but I think it's a great market to have and another way to make money, So, it's going to be weird seeing it in grocery stores.
Oh, totally.
Really weird.
Yeah.
I mean, you're walking by, you're grabbing some milk, some bread, some eggs, and then there's, weed.
Yeah, I mean, we were just talking with Sam, the camera guy, and he was saying that Canada is looking at putting alcohol, so we've got it now in our grocery stores and stuff, but actually putting it into corner stores now.
Yeah.
And it's actually when I travel Europe and stuff, that's what it's like over there.
It's everywhere, yeah.
It's kind of nice because you don't have to go to a specific location.
Yeah.
It would still be monitored by the government and everything, but it's just a lot more accessible. Mm-hmm. So, kind of cool.
Yeah, I'm excited for that, so that's really good on them, and that's our third news item there.
Fourth news item is about Sears. So, everyone thought that they died.
Rest in peace. They're coming back to life.
We've got a bit of a news item about Sears today. So, Sears is actually looking at opening stores again, and this time they're just going to be selling home goods. So, the new stores are actually going to be smaller in size, spanning from 15,000 feet, and any of the largest stores could be up to 100,000 square feet. So, as you guys remember, probably in October last year, 2018, they claimed or filed for bankruptcy. And I mean, Sears everywhere, pretty much. There was, like, madman rushes to get like whatever shoes on sale because they did like 75% off and stuff.
It was a battle zone during that time.
Yeah. But so apparently they've had some partnerships with Amazon over the past year and or 2 years to sell their Alexa products and also some stuff with tire installations and the like, and they're going to be moving forward with the partnership with Amazon, as well as this news item that we're reading about here is saying that they bailed themselves out using the hedge fund called ESL Investments, $5.2 billion. Eddie Lampert, who was the chief executive officer, was the one who bailed them out, so this is why they're kind of coming back from the grave. He used his hedge fund to kind of save them, which is just kind of cool. It was approved that he could do that, and then he's saying eventually, maybe one day, Sears could be public again.
Wow, what a comeback that would be! Sears is very nostalgic to me, obviously, as a kid, and their whole catalog. That's how it kind of brought them on the map. But I think they got to adapt to online sales, e-commerce. Selling their products online, and I think Amazon's a great move for them.
Yeah, sweet.
So that's that. And our last news item is the Scottish Stock Exchange. So apparently Scotland used to have 5 different stock exchanges, which is insane. But they are starting a program. It's called Project Heather. And they only want to be putting companies on their stock exchange that, and this is quoted, impact or have a positive social impact on a global scale and their local communities.
That's really cool.
So they're essentially filtering out some companies. The headline is, "We're not building this for pornographers or gaming companies." So it seems like they don't believe those have good social impacts, which I kind of agree somewhat. Somewhat. But yeah, this is really interesting because this has never been done before. You know, any public exchange has just any company that's willing to go public. You know, there's no rules. Obviously, you have to have, you know, a good balance sheet and, you know, legally, you know, have all your ducks in a row to be on that exchange. But they're not filtered by their business model. Mm-hmm. So, you know, good on them. I think that's great.
I think it is really cool that, I mean, that's even happening. I don't know how it'll actually turn out.
Mm-hmm.
He was saying in here that there's been a big change since the 2008 crash. And that, what was it saying about this? Oh, here, since the financial crisis of 2008 and learned that a financial crisis can have devastating consequences on the real economy, Project Heather is going to build an exchange that can assist and support the real economy by improving access to capital and by providing liquidity to founders and entrepreneurs and those who back them.
Mm-hmm.
So, yeah, an interesting approach to solving that. I think it's cool. I don't trade on the Scottish Exchange, but if there's any people watching that do, that's
if you do, I you know, you might be trading something that will no longer be on there, or, you know, be on different exchanges. Either, you know, does European Union have their own exchange? No, it's per country, right?
Yeah, I think so. I mean, like, the big ones are like London,
I'm sure Germany
would have a big one.
Yeah.
They look, so their criteria, they're looking for businesses with core products and services that are having a positive impact.
Yeah.
So contributing something to help tackle a particular social environmental challenge. It doesn't mean that the company will have a magic bullet. So for climate change, it could be great if they had that, but it's probably not realistic.
Yeah.
And then even if a product can make a small contribution towards a big challenge, it's a positive thing. So they're just looking for companies that show long-term commitment, not just someone who's there to make a quick buck. So kind of like a different way to approach
kind of more
stock,
ethical, right?
Yeah, stock markets and stuff like that. Usually people are just there to make money. So
as always,
I think they have like a really long-term goal for having a positive impact, and that's great.
Yeah, good for them. They're definitely taking a big step forward and going against the grain. So, I guess we'll end it there. Thank you, everyone, for watching. I just wanted to shout out Sam, who's our recording guy, who's actually downstairs, and Miranda for joining us in the audience.
He's not even
here, yeah.
So no shout out. We take it back.
Yeah. So anyways, thank you guys for watching. We really appreciate it. Leave a comment down below on your thoughts of the podcast. Did we do good? Did we do bad?
And if you have suggestions for this guy, give us a name for what we can call him. I think last week we got a suggestion for Brad.
Yeah, for Brad. So leave a comment below on our mannequin on what we should name him.
Yeah.
Because we want to start using him as like an actual prop.
This is Jake's trading bot.
Yeah, this is my trading bot. It trades for me. So yeah, leave a comment below what you want the mannequin to be named, and we will pick the most voted answer. So anyways, thank you guys for watching. Thank you, Ben, for joining me on the podcast. And we will see you next week on To The Point. Have a good one, guys.
See ya.
Peace. Boom.
Stop recording. Oh, I wasn't recording this whole time.